Hi everybody, Russell Markham here from VectorVest. Before we get going today, please note our financial services license. You can check out more of us there per our financial services link there on our webpage. In addition, please note today I can't give you any personal advice. I'm licensed for general advice only. Past performance is not guarantee of future results. Forecasts and backtests used or discussed in this presentation are intended as guide only, and actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. So we're talking about the big banks today, the top 5 banks. You see Macquarie's just overtaken ANZ as of time recording here. It's just slightly bigger in terms of total market capitalization. And there, as we referred in the weekly essay there, if you scroll all the way to the very end in stock viewer, so I've gone to viewers here and I've gone to stock viewer here, or in fact actually I'm in watch lists to begin with, but if you're in watch lists as well, but also if you're in stock viewer, so if you've gone to viewers then stock viewer and you scroll all the way to the very end here, you'll see the third last one here, market capitalization. Alright, so it doesn't matter whether you're in stock viewer or watch lists, that market capitalization there is just simply the shares outstanding, so shares in millions multiplied through by the current share price. So you'd come all the way back here and multiply through by that current share price. It's just a fancy way of saying how big is that company. All right, so market capitalization, the size of that company. I'm going to go back to watchlist viewer here, and you'll see before I was in the ASX 200, for example. And before we start analyzing the banks, let's just I'll just make this nice and neat here. Right-click, order fit all columns. I want to just give you a quick snapshot. So if I go to the start of the year, all right, so all the way back to the start of the year, this is the ASX 200 here, and I'll test the top 100 odd. So that's the first trading day there, and I'll quick test. You can do 100 at a time, so I'll do 100. There we go. Quick test the top 100, and here we go. Our best to our worst, so our top performer there in ASX 200, wow, 73%, but then it drops very quickly, 38, 29, 20. There's only a handful with double digits, and then from there on in, it slides away very quickly. And you can see that there's a total of 85 losers with only 15 winners in the top 100. Okay, you can see that the average there across those 100 stocks in the ASX 200 that I've tested, there is a loss of 20% versus the market there of 18% loss. So you can see a consistent theme since the start of the year. There's around about 18 to 20% loss. So bearing that in mind, what I've done here is I've created a watch list for the banks, just created my own group, new group. I called it banks, and once I created that group, I then created a new watch list, and I called it banks again, and I just simply added in mqg.ax, nab.ax, anz.ax, wbc.ax, and cba.ax, right? So you add them in here. So mqg.ax, comma, next one, nab.ax, comma, etc., etc. And once you've put them all in, click add, and it'll save it to your watch list, which you've set up per your given group. All right, I'll just take that out for now. So here they all are, and you can see the total market capitalization as noted there in the weekly essay there. They're getting very close. They're bunching up. All right, so let's just sort this in descending order. Here we go. And you can see, look at that, CommBank right up at the top of the list, and then it's followed by NAB. And then you can see these are very bunched up, very close here. Macquarie, Westpac, and ANZ. That's as of 4 January 2022. Now, if I roll it through forward until my current time of recording here, 21 June, that's the latest data I've got now, you can see CommBank 153 and then 86 for NAB, and then look how close these ones are here, 69, 62, 61. This is in millions, right? So 69,000, 62,000, 61,000, a million, right? And you can see there's a real battle going on between Macquarie and ANZ, right? You know, between 4th and 5th spot, and this can change week to week. Let's have a look here. Let's go back to the start of the year. And well, I can keep it on this date here actually. Another way of doing it is to quick test. I'll quick test all 5 here. And what I'll do here now is I'll set the date back. All right, so the start of January the 4th through until my current date, the 21st of June. Run it to your current date to do the analysis. And look at that over here. The biggest loser there was Macquarie, 22, followed by ANZ at 21, CBA, Westpac, and NAB. The weighting across all 5 of these, the average loss there was 14%. So it's less than what we saw on the top 100 that we tested on the ASX 200, for example. It looks to me like the banks are in line with the overall market. And therefore, it can be tempting sometimes to try jump to conclusions. I think it's more a case of the fact that the market's falling, and therefore, as we note, we don't advocate buying falling shares and falling markets. We advocate at VictorVest buying rising shares and rising markets. So we're in a falling market. It makes sense that the banks will not be immune to that either. All right. So an outgoing tide, drops all boats or most boats. An incoming tide raises all, if not most boats. And that's what we're seeing there on that analogy. So it's in line with what the market's doing on average. Drilling into the total picture here for this watch list I've generated, let's view the watch list average here. So you can see the average there across the banks. Look at those earnings. And this is what we're seeing here, a big disconnect between the price. The price is going down. I'll just make that jump out a tad more. So the price is going down, yet the earnings are going up. You can't continue to have a rising set of earnings with a falling price. At some point, that price is going to have to reflect what's going on with the earnings. And we've seen that time and time again. Rising earnings, rising share prices. So we watch out of interest here. It's just a matter of time. I think the key ingredient is going to be market timing, of course. All right. So surprise, surprise, market timing. So you can see here our confirmed down signal there. If I put on the date line here, it kicked in there. All right. As of the 14th of January, we've been in a confirmed down, and the banks sort of held up against the trend very well. But as long as that confirmed down remains in place, and the longer it remains in place, the more susceptible stocks become to falling in price. There's only so long you can go against the trend. So the banks did really well. You've got to hand it to them. They certainly went against the overall market trend, but eventually that market trend is catching up, and we're seeing a catch up here. So the temptation then is to go and look at all the different opinions. There's a lot of different opinions out there in the marketplace at the moment. Rising interest rates will lead to, a destabilization of the property market, which in turn will impact the banks. Or, rising interest rates could start making net profit margins difficult for the banks. All right, there's lots of different viewpoints out there, but what we do here at VictorVest is we just look at what's in front of us. Here we are. This is a 12-month leading forecast in earnings. We're not seeing any fall away in those earnings just yet. If I add in the earnings growth rate, found under capital appreciation, GRT, earnings growth rate. All right, this is what the bank's looking to grow their earnings by on average, and I can see over here it's still holding up very, very nicely there at 15%, what they're looking to grow those earnings by. Net profit margin across all the banks holding very steady as well. I'm not seeing a decline there. The only thing that's jumping out is sales. You can see sales have been a little bit on the decline here. All right, so you can see that you can see here sales. These are in millions, 33,392, and you can see it's dropped from 33,000 down to 23,000. However, the net profit margin has picked up, so the sales taking place on average are more profitable, which in turn then leads to those earnings, the earnings continuing to power up. All right, so although sales have declined somewhat, the net profit margins have picked up to help cover that, smooth that over. So the big picture is that we're not seeing any adverse impact just yet on the fundamentals. So I think it's fair to say that, talking heads out there, investment opinions, investors and the likes, they're coming to a conclusion long before any of that is supported by the facts. All right, there's a lot of fear out there that these rising interest rates are going to impact upon the banks. Until we start seeing it in the fundamentals here, we cannot say that that is the case because we're just not seeing it. I think it's more to do, as we note, more to do with the fact that the overall market is declining. So once again, at VictorVest, we advocate buying rising shares and rising markets. So would now be the time to rush out and buy the banks, in our opinion, based on what we teach. We would wait until market timing is back in our favor. Then we can come back and reassess the banks. Are the earnings continuing to rise? You know, if you're looking then to go and buy those banks, you'd want to make sure that the technicals and average are rising as well. So you want to make sure the technicals are picking up, the earnings are holding steady. All right, you want to check all those key parameters. So for now, we'll keep this in our watch list. We'll wait until the market turns based on our market timing. And then when market timing presents the opportunity to go back into the market, we'll then reassess the banks. All right, so here is our, let's add a new one here, put in our market timing. So here we are with market timing. We're still currently in a confirmed down. We'll wait until we get that confirmed up, then go back and reassess the banks. So that's VectorVest's take right now in the market for the banks. Hope you got a lot out of it. Until next week, bye for now.